All right, welcome back, everyone. Welcome to a new trading week. Happy Sunday. Jeff here with FX MindShift, and in today's video, it's going to be another banger, guys. Hope you guys are ready to take some notes here. I'm going to show you guys another super simple, super effective strategy and entry model where you can use this to basically rinse prop firms with. Okay, pass any evaluation, get consistent payouts with. Right, this is going to be a really powerful entry method. So if you guys have been following along with my videos, I've been showing you guys how to use CRT on the daily candles, right, to find your bias, and then using that bias to drill down to lower time frame to find your entry model. Okay, well, this is basically similar, okay, but instead of the daily candle, so this requires no daily bias, right? All we're going to use is a single 4-hour candle, and this is going to be happening at a specific time of day, right? And then we can drill down into the M1 to find sniper entries, okay? And you can catch basically the entire expansion of the 4-hour candle move, okay, if you time it correctly. And like I said, absolutely rinse prop firms with this. Okay, so if you guys haven't watched my video on CRT or the one candle entry method, I suggest you go do that first. There's going to be a link in the description below for you guys to do that. Watch that video first. That's going to make a lot more sense before you go on to this one. But if you have, then let's just get right into the meat and potatoes, all right? So first thing I'm going to do is we're going to introduce a 4-hour CRT, okay? So basically this is going to be the exact same thing as the daily candles, okay? But now we're looking for a specific 4-hour candle to trade the expansion, okay, at a specific time of day, right? Now this is a bullish example. This is our bearish example, okay? And you can see each of these candles represents a 4-hour candle, okay? Now I trade futures, okay? So I'm going to be trading this candle here, the expansion of this candle if we're bullish, and this candle over here if we're bearish, right? And it's going to be the 10 a.m. candle, right? Now if you trade Forex, then this is going to be the 9 a.m. candle, so it's going to be 1 hour earlier. But since I trade futures, I'm using the 10 o'clock candle. Okay, so basically what I need to do is you need to watch and see what happens with the 2 o'clock and the 6 o'clock. Okay, so in a bullish example, the 6 a.m. candle ideally is going to be sweeping out 2 o'clock candles low and then trading back inside of the range. Okay, so here's our CRH, which is candle range high of the 2 o'clock candle and candle range low. All right, 6 o'clock candle comes in and sweeps out that low and then closes back inside of the range. Okay, so now what I'm looking to do is I'm looking to capitalize at 10 a.m., right? Because the expansion happens on this third candle, right? So I want to trade the opening after the wick has been formed, right? So I want to see price actually manipulate a little bit lower after the open, right? Form that lower wick, and then I'm looking to trade this whole expansion, right, through to the opposite end of the range, the candle range high in this case, if we're bullish, right? And if we're bearish, then the candle range low, okay? So I'm looking for a 6 a.m. sweep of the 2 a.m. candle, okay, closing back inside of the range. Then I want to see price manipulate and create the wick of the next 4-hour candle at 10 a.m. open, right? And then when the wick is created, we get the confirmation, and then we trade the expansion to the opposite end of the range, in this case here, candle range low, right? And trade the expansion, okay? So that is the idea in a nutshell. So what does that look like on the lower time frame? When we drop down into the lower time frames, okay, how do we know how to trade or how to take the entry? So let's drop down here to the lower time frame entry model. Now this is a bullish example, okay, so you just kind of flip this around for bearish, but this is our lower time frame entry model. So when we go down to the M1 chart, okay, what we're looking to do is, this is the 10 o'clock open, okay? So when the 6 o'clock candle closes, okay, and we sweep out that 2 o'clock candle low, right, ideally that's going to be into some kind of point of interest right here, okay? And if you look, if you remember back in our 5-step checklist, right, the first step is going to be what? Our higher time frame point of interest. So that manipulation lower into the higher time frame point of interest is going to be like an order block and imbalance, okay? It could also be a sweeping out previous session low or a swing low, a key level, right? A sweeping out internal liquidity. And then what we're going to get is we're going to get a displacement, right? A displacement with a change of character. So the down close candles at the open, right? When we saw price open at 10 a.m., because we're bullish, we're expecting that to go lower first, right? So we want to see the 10 a.m. candle open, trade lower, okay? Manipulate into some sort of point of interest, right? With liquidity sweep. And then we want to see displacement, okay? And then that displacement here is also going to give us a change of character. So the down close candles that traded down into that manipulation then gets closed through, okay, on the upside here with this change of character. Bonus points if you also get an inversion, okay? So if there is an imbalance, in this case here, you can see there's an imbalance right here, okay? If we get an inversion with that change of character, okay, that's just going to make this a lot more powerful of a signal, okay? So when that happens and we get that change of character and the close back above, right, that 10 a.m. open, we can assume that the wick of this 4-hour candle has now been formed, okay? And now when we take our entry, this is essentially where we're going to take our entry, okay? Now we're looking to trade and capitalize on this entire expansion move higher, right, to the other opposing end of the range, right, which is that candle range high. Okay, so this is our lower time frame entry model. That's the gist of it. Okay, and just like I said, flip this around for bearish entry model. Okay, it's the same exact thing, right? We'll be looking for price to manipulate higher after the 10 a.m. open. Okay, and then we get a strong shift and the displacement lower, closing through the up close candles, right, giving us a change of character, and then that's what we would enter, assuming that that would be the 4-hour wick formation, and then we look to capture the expansion lower, right, of the 4-hour body candle, okay? And that is essentially what we will be looking for in terms of a setup. So now let's go into the chart examples. Okay, I'm going to show you how this looks on a live chart so you guys can understand exactly what to look for in live markets. Okay, so here we are on NASDAQ, right? This is the 4-hour chart, and I've just replayed back to a couple examples that happened just recently. Okay, this was on Friday, January 16th. Okay, so if you look here, we have a 4-hour candle. This is the 6 o'clock candle here, right? And this is the 2 o'clock candle over here. Now, if you'll notice, the 6 o'clock candle, okay, it's a large bearish candle here, but we have swept out the 2 o'clock candle's high, okay? And now when we've done that, we've also traded into this 4-hour order block. So we have step 1 fulfilled, which is a higher time frame point of interest, right? Trading into this 4-hour order block. At the same time, we get our liquidity sweep, right, which is our step 2, and sweeping out the 2 o'clock candle's high, right? And then we get a close back inside the range with this big bearish candle, right? There's our displacement, step 3, right? So now all we need to do is we're looking for price to now trade to the opposing end of the range and sweep out the candle range low liquidity, right? So we could be looking for price to essentially take out this low, or this low, right? Let's say we take out all 3 of these here. This would be potentially our lower end target. All right. So now let's drop down to the 1-minute chart. Okay. So now we're looking at the 10 o'clock open, right? So I'm going to draw a line here. 10 o'clock open. All right. Now, since we're bearish and we're looking for price to run to the opposing end of liquidity lower here, okay, we want price to manipulate higher first, right? So what we want to look for is we want to look for places above where price could potentially manipulate, all right? So just like when we look for our steps in the checklist on the 4-hour, we can also look for the same things here on the 1-minute as well. So you can see here we have some internal liquidity, right? And we also have an imbalance up here, right? We got an imbalance up here, but we want to look for the closest first, right? So the closest here you can see is we have this swing high followed by a imbalance just above here, okay? Right? Now this is going to be the open of that 10 o'clock candle. So what essentially I want to see is price to trade higher first, right? Trade into a point of interest. Now it could be here, it could be higher as well. But when we get that reaction, it's going to then give us a move lower and a change of character. And then it's also going to close back below that 10 o'clock open. So essentially what's going to happen is we're going to get something like this. Price is going to move higher, right? Trade into a point of interest, and then we're going to get a change of character, and then we're going to close back below the open. And then what will happen is we will have the formation of that 4-hour wick right here, right? And then we want to look to trade the expansion lower to our target here. Okay, so let's play price forward and see what happens here. Okay, so there's the open. Okay, and so price comes back up, over, right? Hits our point of interest here. Now, just because it hit the point of interest doesn't mean that we have a setup or an entry, right? We need to see now price give us a change of character. So you can see here we have these two up close candles that trade into the point of interest, right? And we also sweep out this internal high. Now, if price were to come back through and close below these two bullish candles and also close below the 10 a.m. open, then potentially we have that 4-hour wick formation, right? And then we can look to trade the formation, the expansion, sorry, lower to our target on draw liquidity, which is this low right here. Okay, so let's play price forward and continue to see what happens, right? So price does go a little bit higher. And hitting the open and right there. Okay, so the moment we get that closure through, so we have price trading higher, manipulating higher, trading into a imbalance, right? Also sweeping out internal highs here. The bullish candles trading up into that point of interest then get traded through here. The open also gets traded through here. So now we can assume that this is the 4-hour wick formation. Okay, and so now we could take our entry, right? So let's say on the close of that candle right there, my stop is going to go just above that high. So we got 50 points. Okay, and I'm just going to go for a 1 to 2, right? Well, first I want to run to this low, right? And so we get at least a 1 to 1. So you see we get that. That is right there. Okay, and okay, right there, right? So our 1 to 1. Now that is what we're aiming for, right? And so when we get that, there's a couple ways you can do this, right? If you want to manage a trade, I'm happy with a 1 to 1 and getting 50 points, right? Nothing wrong with that, okay? If you want to go for 1 to 2, right? You can also, once you hit that 1 to 1, you could always set your trade to break even, right? Or however you want to manage it, or just leave it alone, right? And go for 1 to 2. And then that will be your next target. So let's play price forward here. And oh, you see it does come back and hit our entry again. Okay, and right there. Okay, there's our 2 to 1. Okay, so I would recommend going for at least 2R if you can, right? At minimum, you want to have at least a 1R trade to the next logical draw on liquidity. In this case here, this was a 1 to 1 to the next logical draw on liquidity, right? After that, you can either, set your trade to break even. In this case, we would have gotten stopped out at break even, right? Otherwise, if you just left the stop alone and went for 2R, right, then you would have got it here, okay? Let's go one more step here. Let's see if we get 3R. 3R would be down here to the daily low, almost. Okay, and let's see if we get that. And nope, looks like we come back and we would be hit or stopped out at break even. Okay, so you don't want to get too greedy with this, right? I would say recommending 2R is a good happy medium, right? At the very least, you want to try to get at least 1R to the next logical draw on liquidity, right? And if that is 2R, then great. I would just get out at 2R. But if you want to extend it or you want to trail your stop, right, and trail the candles to like 3R or 4R, sometimes you'll be able to catch some really large runners, because what we're trying to do is we're trying to capture the expansion of that 4-hour candle, right? So you can see here this ends up being a big wick, but if we get a entry here and we get this big expansion like that, times like this, we're going to get 4, 5, 6 R, some big R numbers. Okay, let's go to the next example here. I'm going to show you a bullish example. Okay, so here we are on our next example. All right, so you can see here this happened on Monday, January 19th. Okay, so here we have a 2 o'clock candle, right? And then we have a 6 o'clock candle. Notice how the 6 o'clock candle has swept out the 2 o'clock candle's low and traded back inside the range. But not only that, we also swept out this very large liquidity pool over here in the form of this big key level, right? This swing low. So you can see here we have a sweep of not only candle 2's low, but also a major pool of liquidity here. And then it closed back inside the range with this 6 o'clock candle. Okay, so now let's drop down to the 1 minute and we're going to plot out our 10 a.m. open. Okay, so here we go. All right, now, again, since we're going to be bullish here and we're going to look for price to trade higher, let's go back and let's look at our target. So our target would be the opposing end of the candle range high here, which is right here. We could also target the imbalance as well and this high, but let's just keep it simple. This is the closest one. So let's say we're going to be looking for price to come here, right, as our final target. So if we go to the 1 minute here and we track our open, here's the 10 o'clock open. And make sure it's on the open itself, okay, not the wick, right? And then this is our objective, right? So what we want to see is for price to open, trade lower first, right? Then trade higher, okay? Give us a change of character, confirm that the wick formation has formed, and then we want to trade the expansion up to our drawn liquidity, okay? So you can see down here we have some areas of some POIs, right? So the closest one is going to be just this imbalance right here, right? And that's the low-hanging fruit. Let's see just below that, there's this as well. But let's play price forward here. Okay, so here's the open. There's 10 o'clock. Remember, we want to see price go lower first. So that is not what we want to see. Okay, and we're bouncing. All right, now we're going lower. All right, so now we have price going lower, right? Trading into this imbalance, actually trading through now to the next imbalance right here. Okay, actually didn't quite touch it there. And now coming back, here's the open, all right? And, okay, right there, we get the close above the open. Now, we also want to see not just the close above the open, but we also want to see the change of character, right? So you can see here we also closed above all of the down close candles here that traded lower into this point of interest, right? And then we get a closure through. So we get a change of character and we also get a closure above the 10 a.m. open. So I can look to enter my trade right there on that closure. My stop is going to go just below this low here, about 40 points, okay? And then my target is the opposing range high. Okay, that's going to give me just about 2 arcs, so that's fantastic. All right, so let's play this forward. A little bit of a drop and draw down there, but then we eventually get up there, right? There you go. So that took a little bit, right? A little bit of ebb and flow here, even took some drawdown, but eventually we did get up there, right? So there's our nice 2R, 80 points, right? Nice little entry, and after the confirmation of the low and then the change of character, right? So we have the formation of the wick here, and then we have the expansion to the opposing range high. Okay, pretty simple and straightforward. Let's do one more example so you guys really get this. All right, so here we are on the next example. So as you can see here, we have another 6 o'clock candle closure here after sweeping out the 2 o'clock candle's low. Not only that, but sweeping out all of these candle lows as well, and trading into a 4-hour imbalance all the way here to the left. Okay, so higher time frame point of interest fulfilled, right? Liquidity sweep fulfilled. 6 o'clock candle does close back inside the range. It closes well back inside the range here, closes through these highs, right? And so again, we can target the opposing end of the range, which is these highs up here. Okay, so again, let's go down to our 1 minute time frame. Okay, and then we're going to mark out the 10 o'clock open right here. Okay, so again, here's our target. We're going to look for price to manipulate lower first and then trade higher and give us a change of character. Create the wick, right? Confirm, and then look to trade the expansion. So let's take a look and play price forward. So we have an imbalance just below here. We also have an order block here. But let's see what price does. Okay, price is going lower. All right, so we did trade into the imbalance right here. All right, so we've got 2 down close candles here. And let's see if we trade back above. Okay, here we go. We got 1, 2, 3, 4 down close candles trading into this imbalance here, right? And so all we would need is a closure above this 10 a.m. open candle, right? And also these bearish candles right here, right? So 2 for 1. So let's see what happens here. Next candle. All right, right there, right? So we got a closure above. There's our change of character. And also we're closing back above the 10 a.m. open candle, right? Let's make this bigger here so you can see exactly how that played out. So this right here, we can expect this to be the wick of that 4-hour candle, right? We're going to put our entry right here. Stop is underneath the low, okay, right about 36 points, okay, and opposing range high is up here, yesterday's high. Okay, so that is going to be about a 3-hour trade, okay, so that is fantastic. Let's see if we get this. Okay, and boom, right? Nice and easy, and a nice 3-hour trade. And it does go even further. So again, you can manage it however you want. After, 2-hour, 3-hour, you could set it to break even, or you could just take it as is, right? A 3-hour is definitely a good trade. But yeah, that is basically a simple and effective way to find entries, okay? Using a 4-hour candle, right, at 10 o'clock, after seeing what the 6 o'clock candle has done, okay? And then using that based off of the bias to find a 1-minute entry model, right? And you can see how effective this is. So like I said, as I promised, there's going to be some math that I'm going to do for you guys so you guys can see exactly what you guys need to pass an evaluation. So let's take a look at this next screen over here. All right, so let's take a quick look at this example here, right? And I'm just going to assume a 50K evaluation, right? Because I'm assuming that that's probably going to be the most common evaluation size that everyone goes with, right? So with a 50K evaluation, you can expect a profit target of 3,000, right? A daily drawdown of 2,000, some maybe more. But let's just say profit target 3,000, daily drawdown 2,000, right? We're going to risk 1%, which is $500 for a 2% reward, right? So 1 to 2 risk reward, $1,000, right? And let's just say in a given month, we take 11 total trades, okay? We win 6 of them, we lose 5 of them, right? So not a great win rate, right? The win rate is just over 50%, right? So I'm sure you can all agree that, we could get something like this or very similar to this in the course of a month. So over the course of a month with 11 trades, 6 wins is $6,000, right? $1,000 per trade. 5 losses would be $2,500, giving you a net profit of $3,500. Okay, that would easily pass your evaluation. Okay, and that would also easily get you a lot of your profit payouts, right? And once you are funded as well. Okay, so you can see even with a very mediocre win rate of 54%, right, and finding just 11 trades, 6 of them being winners in a month, I think that is very, very doable. I think that's very reasonable amount to look for. Okay, you can see that you can pass a prop firm pretty easily within that 30-day period with a very healthy net profit target, right? And also for those of you that are funded looking to get your payouts, right, this is also a very good way to do this as well. With a very limited amount of trades, and like I said, a very mediocre win rate. All right, guys, that's going to do it for this video. For your homework, go ahead and backtest this yourself on the 4-hour charts. All right, go and find 5 examples of this CRT setup. Drill down to the 1 minute and see if you could have caught those those 1 minute entries. You'll be surprised at how effective and how simple this strategy is. For those of you that found this video helpful, right, and you found that, they actually helped you see the market clearly, go ahead and hit that like button, right? Make sure you're subscribed to the channel. Next week, I'll be back again with another banger. But in the meantime, this is Jeff here with FX MindShift, and I'll see you guys on the next one. Take care.
Till we got the world, I've got to get in, and then something's gotta hit it right on the nose. So if you really get exactly what I meant by my soul, I could love you forever. Would you stay with me tonight? Will you love me forever? 'Cause this just feels so right.